Good afternoon, everyone. Welcome to Income Taxes and Personal Financial Pitfalls for Clergy. There's some pitfalls we want to encourage you to go into, and that's not at all what we're doing. We've got Reverend Nate Berneking, who is the treasurer of the Missouri Annual Conference, to help us once again. If any of y'all have attended these in the past, he has been kind enough to work with us two different occasions, like every other year. You're going to really enjoy him and find him very knowledgeable. I guess his title is Director of Finance and Administrative Ministries officially for the Missouri Annual Conference. Went to seminary at Emory, Candler. He practiced law as a corporate attorney. He was a pastor in a local church. He's got all the credentials we need for him to be able to talk about this. I would ask that if you have questions as we go along, please enter them in the chat section, and Nate will address them as he can a little bit later on. Also want to tell you that we have a second session with Nate this week on Friday, same time, same place. It's Friday at 2 p.m. It's going to be financial and legal issues for churches. I would anticipate today will take something a little bit longer than 90 minutes. The one Friday might be a little shorter than the one today. We will be recording both of these sessions, which will be posted on our website just in a few days. So you can go back and listen again or catch some part you might have missed. Registration, of course, you do on our website. It's all free, which does not at all reflect the value of Nate's leadership and knowledge. So with all that, I think we're done with our part of it. And I want to say, Nate, thank you very much for your help. And do as good as you've done the last couple of times, and you'll be a rave hit.
Hey, Rob, thanks so much. It's great to be with you all. I told Rob, that he made the comment, well, at least you didn't have to travel this time. And my response to that was, well, yeah, but I don't get to spend time in Louisiana where I really actually like to go. So I do miss being with y'all in person. But I am happy that we have the technology that allows me to present this way. So Rob said it. I just want to reiterate, if you have a question today, write it in the chat. I will watch as I go along, and I'll pause occasionally. And make sure you write it in the chat, not the Q&A section. Those are two different things. I am not, I don't know that I have the capacity to respond to raised hands, so that the raised hand, let's just set that aside, work via the chat function with your questions, and I will respond to all of those as best I can. If they start to get really overwhelming, I might just pause on the questions and say, let's hold those to the end. I am today going to talk some of what I'm going to talk about. If you have been to Westpath events, it probably is going to be a little bit familiar to you. That is because I do a form of this presentation in several different places. So some of it's familiar, but I have tried to, I'm going to go into a little bit more detail. If you were on a Westpath event, I guess that was just last week. I think I did one for their Delivered to You series. I did a similar presentation, but that was highly condensed. I squeezed what is normally a 90-minute presentation into 30 minutes. And so this one, we're going to be a little bit more leisurely with this one. I'm going to do some more explaining, take my time with some issues. I am going to specifically address several issues. First of all, and give you a little bit of a roadmap. I am going to describe to you clergy tax. I'm going to tell you what makes clergy tax unique. And I'm going to do that through a series of questions and answers to those questions. They're what you need to be able to ask and answer to make sure your taxes are done appropriately. And then I'm going to go through U.S. income tax. I'm just going to explain it to you how it works so that you are well informed about your income taxes. And then finally, I'm going to take everything that we've talked about, what makes clergy tax unique, and also kind of how the U.S. income tax system works. And I'm going to talk about some really very specific clergy issues and kind of take those apart so that you better understand. I will address housing. I will address professional expenses and things like that. So that's kind of a roadmap as to where we're going. Again, the length, Rob was right. I think we'll probably go a little bit longer than 90 minutes today, but some of that will depend on the number of questions that you all have in the chat function. So, and we will be time limited to no more than 2 hours. So thanks so much for joining me. I'm going to see if I can't figure out how to share my screen here. And that way you can follow along with the slides. And I believe that the office has the slides available for you should you want them in the future. So that is my name. That is my title. But I'm going to start today. I do this all the time. It's a bit of a joke that I tell. And that is this. So those of you who are clergy, those of you who went, especially those who went to seminary, maybe even those of you who have done a course of study, you've probably come across the phrase or the term hermeneutical key. Hermeneutical key is it's a lens of interpretation, if you will. And so my joke is the hermeneutical key for today is really simple. It's this: United Methodist clergy, special. We are special. I am clergy in the United Methodist Church. I'm an ordained elder. I'm really proud of that fact. And I can say, as an ordained elder in the United Methodist Church, my colleagues, clergy, we are special people. There is no doubt about it. And I think if I have spouses that are participating in this, they would say even more specifically that we are special people in every sense of that term. Look, we are special. We believe we have a call, a vocation that's given to us by the creator of all things to, answer a certain task in that creator's purpose and desire for the creation. That is pretty special. That makes us really unique among people. And on the other hand, we are really quirky and eccentric people. But the truth of the matter is we're special when it comes to the federal government, and in particular, the Internal Revenue Service for tax purposes. We are special. I don't think there is a category of people that has the same sort of tax, structure and setup as clergy. And it doesn't matter if you're United Methodist or if you're a clergy in a different denomination, or even if you are a clergy in a different religious tradition. In the United States, you have a really unique and special tax circumstance. And so I'm going to talk about that today. And I'm going to start with these 3 questions. These are my key questions that you have to ask, but you also have to answer them in order to make sure that your taxes are done properly, that they're done correctly. And I would say that that's the case even if you have a tax preparer, because in my experience, tax preparers do not always get it right. In fact, every year, I end up answering a lot of questions from tax preparers, and I end up telling a lot of tax preparers that they might be doing a particular clergy person's taxes incorrectly because of an understanding they have that's really a misunderstanding. So the first question is, and you have to, I tell this joke all the time too, you have to say it with the right intonation of your voice. Clergy pay what? Because it seems like to us as clergy, we have to pay an awful lot, and we pay a lot of different things in the world of taxes. Now, first of all, let me say this. You probably, in Louisiana, probably have some kind of state tax obligation somewhere along the line. It may be an income tax, it may be a sales tax. I'm not going to talk about that. I'm not from Louisiana. I haven't practiced law in Louisiana, but you may have that, and you need to educate yourself on what your state obligations are. I'm going to stick with what we as clergy have to pay to the federal government, because that's the same whether you're in Missouri, Louisiana, or anywhere else in the United States for that matter. Well, the first thing that we have to pay is we have to pay income tax. And our income tax system in the United States is based on the Internal Revenue Code. That is a really long statute. I remember when I was in law school, I took U.S. income tax, and I had to go to that was back, in the Stone Ages when we had to go to the bookstore to buy our books. I went to the bookstore, and the income tax, I had a textbook, but then I also had to buy a copy of the Internal Revenue Code, and it was an abridged copy. It wasn't even the whole thing. It was shortened, and it was the thickest book that I have ever had to purchase for a class. It was massive, and it had thin pages like a Bible. It was not gilded on the edges, but it's a huge statute. And then on top of that, the statute is interpreted by the IRS and by other government agencies. And those agencies, in particular the IRS, creates regulations to interpret the statute. And then sometimes you can ask the IRS a question and they'll give you a ruling. The ruling's called a revenue ruling. And sometimes there's a dispute with the IRS and people end up in court over their taxes. And so all in the United States, I think most people understand this. In the United States, court opinions have the effect of being law in the United States. And so all of that together, if you combine it all, it is an entire library's worth of material. And it's all subject to change at any time. Why? Because courts can make different decisions. The IRS is governed by people who are put in place by whoever is president at the time. And so we're undergoing a big transition right now. Now, the IRS has some stability. It's changed. It does change between administrations, but it is a big enough agency that it largely also stays the same. But they can all of a sudden decide that they're going to interpret a particular passage differently than they have in the past. And then, of course, it happened in late 2017. Once in a while, even though we can all agree, regardless of our political affiliation, our Congress, our congressional system is pretty broken most of the time. Once in a while, they get their acts together and they actually pass laws. And they did at the end of 2017. They passed a pretty significant change to the tax code. It had effects on clergy. I'm going to talk about some of those today. And so it's all subject to change. And I tell you all this just to put it on the table. It is really intimidating. And because of that, in my experience, clergy especially tend to have the same reaction to it. They prefer to ignore it. But that's a mistake. You cannot ignore income tax and the basic laws that govern income tax in the United States, or you can end up in a world of hurt. Ignoring your taxes for too long can create real legal problems with the IRS and with law enforcement. You don't want to be in that situation. I've written a book, and this is one of the things I say in the book. It's the same for churches and it's the same for clergy. Nothing will affect your ministry more negatively than getting into some sort of legal trouble. Avoid that at all costs. So it is intimidating, but you can't ignore it. And my purpose today, I actually this is like sort of, as I consider this part of my ministry, is to make sure that I'm delivering the information that you need to know as a clergy person in a format that you can understand so that you don't have to ignore it. You can actually take action and take the right actions with respect to it. Now, it's made more complicated because you don't just pay income tax. You also pay for Social Security and Medicare. Now, what's Social Security and Medicare? Well, Social Security is like the pension plan for America. It is, you work over the course of your life, you pay money into Social Security, and when you retire, you start getting a check. When you hit 65 or 67 is actually the official age. You can go earlier for a reduced benefit. But when you reach the right age and you apply for Social Security, the government begins to send you a check. Medicare is the retiree health plan for all of America. Again, you work over the course of your life, you hit 65, you retire. And while we can argue about whether or not it's sufficient, the government begins to fund some of your medical expenses in your later life. And that's a really good thing that we provide for our retirees in the United States. However, I said it with Social Security, you work over your life, you pay money in. That's key. You have to pay money in because the number of people who are applying for Social Security is always growing. More and more people are retiring. We're tending to live longer lives than we used to. And somebody has to pay for that. Who pays for it? The people who are still working. Now, if it was a pension plan or if it was a retiree health plan, we wouldn't call them taxes. We'd say what the amount you pay in is your contribution. You pay contributions to fund Social Security and Medicare. And actually, the government wants you to believe that that's what you're doing here as well, because the statutes that govern what gets paid in are both called Contributions Acts. There is the Self-Employment Contributions Act, we're going to call it Fica, and there is the Federal Insurance Contributions Act that we're going to call Fica. But let's be honest, when the government is making you pay something in, it's not a contribution. We call them taxes. And so we also use it interchangeably. We call them Social Security and Medicare taxes. But you pay in one of two ways, FICA or SICA. Let's talk about FICA first. FICA is a payroll tax. And so first of all, to understand FICA, really to understand both FICA and SICA, you have to understand the tax rate to pay for all of Social Security and Medicare is 15.3% of a person's wages, their income. Now, it's a little more complicated than that. There are some deductions, but it's 15.3% of what you make. So 15.3% in FICA actually gets divided. Half of it is paid by the employer, but half of it is withheld from the employee's paycheck. And the employer withholds it from the paycheck and then puts it together with an additional amount that the employer contributes, and the employer sends it all to the IRS. Your church is doing this if you have lay employees for sure. They are paying payroll taxes, and the return that they file to pay those payroll taxes is called a 941. You may have heard of that before. Well, self-employed individuals don't pay FICA. They pay SICA. And they don't pay half. They don't pay 7.65%. They pay the whole thing. Why do they pay the whole thing? They pay the whole thing because they're the employer and the employee. They play both roles. Hopefully that makes sense. So that's FICA and SICA. As clergy, which one do we pay? Well, most people with an employer pay FICA. But clergy it's our hermeneutical key I started with. We're special. So we don't pay FICA, we pay SICA. Clergy pays self-employment contributions. That means you, as a clergy person, have to pay, in addition to your income taxes, the 15.3% to the government. And you're not getting a contribution from your employer. It's all you. Now, I'm going to just move from there. We're at the second question, but we're going to come back to it. So don't worry if you're still not clear. Second question, clergy work for who? And you may see some of the confusion already because we pay self-employment contributions. Conference, bishop, local church, conference board of pensions, in the United Methodist world, all of those parties have some role in our employment as United Methodist clergy. What's the conference do? The conference is kind of the credentialing, or maybe put another way, the hiring body, the Board of Ordained Ministry acting on behalf of the annual conference. And then the clergy session voting on people. We're the ones with those organizations, the conference and the clergy session. It's the gatekeeper to new people coming in. The same, if you're a licensed local pastor, same thing applies, right? But it's the district committee on ordained ministry, but they're acting on behalf of the annual conference. They're hiring. What's the bishop do? Well, the bishop does tell you where to serve, but the bishop also has a supervisory task given to the bishop by the Book of Discipline. Well, the Conference Board of Pensions, they actually administer benefits on behalf of Westpath for you. They're an auxiliary to Westpath by the Book of Discipline. So you see, all of those have a role in clergy employment. But for the purposes of the IRS is concerned with who is paying the salary. And for those pastors who are appointed to a local church, the employer is the local church for purposes of income tax. The IRS would say local church pays the salary, therefore the local church is the employer for purposes of income tax. Now, maybe you see a significant conflict. We're going to get to it, I promise, because we pay self-employment contributions, but we're employed by the local church. Well, third question before I tie it all up. What's your employment status? And what does that mean? I don't mean whether you're employed or unemployed. Here's what I mean. Clergy are treated as employees of the salary paying unit. That's for purposes of income tax, but we're special. So we also pay self-employment contributions. Do you know why, incidentally, we pay self-employment contributions? I'm not lying about this. This is true. We have to pay self-employment tax because churches don't know squat about tax and finance. When Congress created Fica and Fica to fund Social Security and Medicare, Congress looked out on the landscape of churches. And at that time, we're talking back a couple of generations ago. Back then, most churches only had one employee, the pastor. They didn't even have an administrative assistant back then. It was just the pastor. And they said, look, it's just the pastor. And church lay people are never going to figure out how to withhold 7.65%, match it, and send it in with a monthly or quarterly payroll tax return. They'll never figure it out. And most of you probably can resonate, right? Our churches are horrible at things like this. So Congress just made a rule. Pastors, clergy, they are self-employed for purposes of Social Security, for Fica. Sounds simple, except it's not simple, because under Fica, most people who pay it actually have a particular employment status. They're not employees at all. They're called independent contractors. And your church probably has some independent contractors, like the lawn guy, or maybe if you have an HVAC contract with an individual. These people are independent contractors. They supervise their own work. They set their own schedule. And believe me, in Missouri, at least, that the lawn guy always sets his own schedule. You never can count on it. And I don't know why they can't seem to figure out that cutting the grass on Friday is really for the best because it looks good on Sunday. They always cut it on Monday, so it's shaggy by the time Sunday services roll around. But you get the idea. They're independent contractors. And if you come back on Friday, I'm actually going to talk about how your church can tell the difference between an employee and an independent contractor. So I'm not going to answer that question today. If you have it, I'm going to talk about that very specifically on Friday. But the key is independent contractors, they're not employees of whoever it is or whatever it is that's paying them. And they don't get a special tax form that employees do get. Employees get a form called a W-2. The employer has to report the income that they paid to the employee on a W-2. But an independent contractor doesn't get a W-2. An independent contractor gets a much simplified form called a 1099. Well, it is really common for tax preparers and churches to make the following jump. Clergy pay self-employment taxes. Therefore, they must be self-employed, and therefore they must be an independent contractor and get a 1099. But that's wrong. Clergy are special. Despite paying self-employment taxes, they are employees for income tax purposes. It's a paradox. They're employees that happen to have a self-employed status with Social Security and Medicare benefits. Because they're employees, clergy must get a W-2. And this went to tax court several years ago. So it went to tax court, and the IRS said, no, clergy are going to they must get a W-2, and the tax court sided with the IRS. The General Conference of Finance and Administration of the United Methodist Church even tried to argue that, hey, let them get either one. It was rejected. So it's a pretty famous case for United Methodist purposes because it involved us. And it says we have to get a W-2. If you are getting a 1099 from your church, don't call me. You need to call your conference office because you are very clearly supposed to be getting a W-2, not a 1099. So clergy, you get benefits to the administration of the conference. You're supervised by the bishop, but you're employed by the local church for income tax purposes. But you're self-employed for Social Security and Medicare, and that means you have to pay Fica, which means you have a special form when you file your returns on April 15th called a Schedule SE, and you're paying that full 15.3%. But because you're an employee of the local church, you need to be issued a W-2 by January 31 of each year, and it reflecting all the wages and the income that your local church paid you. We'll get to some housing and tax deferred questions later, but churches should not give you a 1099, and they shouldn't withhold FICA. If they've withheld FICA, I'll tell you how to know that in just a minute. If they've withheld FICA, that's another call to your conference office. You need a little bit of help. Doesn't matter what your clergy status is. If you're clergy, you are self-employed for purposes of Social Security and Medicare, and you need to be getting, you need to be paying SICA and not FICA. So let's talk. Let me check the chat, and there weren't any questions a minute ago, and I don't see any questions yet. I hope the chat is working. If you joined a little late, I said this: if you have questions, I'd ask that you actually write it in the chat rather than the Q&A or by raising your hand, because it's much easier to. It is working. Somebody asked if it's working, and I think that's. That may be the foundation office. That I do see the foundation's message. So put your questions in the chat. I don't see any yet, so I'm going to move on, but we're going to stick with kind of the same topic for a minute. I want to work through what a clergy W-2 has to look like. Churches have to give a W-2 at the end of the year, but there are boxes on the W-2 for Social Security and Medicare wages, as well as the Social Security and Medicare taxes that were withheld. It's actually boxes 3, 4, 5, and 6 on the W-2, and those should all have zeros in them. Now, I get this question a lot. Where does my, there's a typo here. It should be CRSP DC. If you've had money paid into CRSP DC or PIP, those are both 403B plans, and those, and also maybe your group health, if you have a group health plan in Louisiana, the contributions made under those are to be shown in box 12, and there are certain codes. And again, I'm going to go over some of that on Friday with local churches so that they know how to do a clergy person's W-2. But for your purposes, box 12 probably will have numbers in it. But boxes 3, 4, 5, and 6 will have zeros. They can show your housing amounts. We're going to talk more about housing towards the end of the presentation today. Those can end up in box 14. And let me just show you where all these boxes are. This is actually a secular person's W-2. And I'll see if my mouse, I'm hoping you can see my mouse on here. Here's box 1. You will absolutely, positively have an amount in box 1. It will be everything that you've been paid less any housing, doesn't appear in box 1. We'll talk about that. And less any amounts that you sent to PIP pre-tax. So all those amounts and any amounts that they sent on your behalf to CRSP or group health, they don't appear in box 1 either. So it's really just the taxable salary appears in box 1. Box 2, if you don't do anything, if you don't fill out a W-4, which you're not obligated to do for your church, it will have a 0 in it. I'm going to talk more about that later too. You don't really want a 0 unless you've been filing quarterly returns. If you're paying quarterly, not a problem. That box 2 will also be a 0. But you might have an amount in there if you're having it voluntarily withheld. If the church has more than one employee and has to pay payroll taxes anyway, they can voluntarily withhold an amount. And I'll talk about that in a little bit. And that would appear in box 2. But here they are, 3, 4, 5, and 6 for a clergy person all have zeros in them. This is box 12. You see the codes here. Don't worry about these codes. These are for a secular person, but you will have different codes in here, and you'll have an amount for things like PIP and group health contributions. You'll probably have an X for a retirement plan. And then if your church is really sophisticated, they will put your housing amount, if you got a housing allowance, or if you get utilities covered, they'll put that amount in box 14. The IRS doesn't care, but it's helpful to you. And you'll see why in a little bit, because we have to report our housing independently, even though it doesn't appear in box 1 and doesn't have income taxes paid on it. So I'm going to pause again and check to see. I don't see any questions, but I'm actually deeply appreciative to Don, who did put something in the message, so I know it's working in the chat. So thanks, Don, for doing that. Just pause a minute to see if any questions pop up. And if not, I am going to move on. Oh, I do have a question. What if your church has not reported any other 403B plans on the W-2? If you think, it says any other 403B plan, if you don't have, so CRSP and CPP. So actually CRSP and CPP don't get reported. CPP is not a 403B plan. It's a death and disability plan. And actually even CRSP, they really don't have to report it because it's an employer contribution. So that's not something to worry about. You do want PIP. If you've had money withheld from your paycheck and report it, that needs to be reported in box 12 as a contribution to a 403B. So that, I think the question, I think you're okay if you aren't seeing CPP and CRSP in there. Those don't have to be reported. And then second, let's see. So the next question is, what do we do if you have a parsonage and fair rental value? I am going to talk extensively about that in just a little bit later in the presentation. So I'm going to just hold that question and see if I don't answer it in another section. So that's kind of an intro to why clergy have a really unique tax situation and why we have to do webinars on clergy tax. Whereas other employers don't have to worry about it. That Social Security Medicare issue makes you really unique, makes you special. But now I want to just sort of pull back. Let's set Social Security and Medicare aside for a few minutes. I want to just talk about income tax, and I want to introduce the basics of our income tax system to you. I want you to be able to understand it so that you could understand what makes a clergy person even more. And actually the question about parsonages and housing is a great one. And we need some background before we can answer it. So first of all, income tax in the United States. I think most people think that income tax is just a straight up percentage of your income. That's actually not true. You can figure out what percentage of income tax, what percentage of your income you're paying in income tax, but that's different. That's actually called the marginal rate for you. The income tax itself is not calculated based on a flat percentage of your income. That's not how it works. Instead, income tax is based on a concept, and it's a concept created by the Internal Revenue Code called taxable income. And taxable income is not everything you make. You have to pull things out of it in order to figure out what your taxable income is. And really, when you sit down to do your taxes, you fill out a form to do your taxes. Really what we're doing is we're filing an income tax return. An income tax return is kind of it's a truing up. we'll talk more about this, but you're supposed to be paying your taxes all along as you go throughout the course of the year. And then you true it up. If you paid in too much, you get some back. If you haven't paid in enough, you have to pay some in. That true up, that return is called a 1040, and it is a 4-step process. And it involves getting you to taxable income. And so you might think, well, wait a second, 4 steps. That when I sit down to do the 1040, it's a lot of steps. It's 30 some odd lines. And that was after they simplified it. Here's the great thing. It's actually a really kind of elegant system. It is 4 steps, and all of those 30 some odd lines fit in to one of the 4 steps. You begin with gross income. Gross income is a share of, let me step back. Gross income is really everything you make, unless the IRS has said, it doesn't count. Well, pastors have one big thing that the IRS says doesn't count, and that is housing. Now, also some pre-tax contributions to things like PIP, stuff like that. But really, it's everything else. And when I say everything else, I truly mean everything else. If you, if you wrote a book, I speak from experience, you get a paltry royalty from Abingdon Press. And let me tell you, it is paltry. You get it. Abingdon Press is going to send you a 1099 every year, and you have to report that. That's part of your gross income. If you owned a home before you went into ministry and you rent it, you get rent from it, you got to report that. That's gross income now, because that's no longer housing. That's investment income. Interest on bank accounts, interest on other kinds of accounts that you were paid. If you realized income, it's probably gross income. In fact, people get a kick out of this. If you robbed a bank, technically, the money you gained, it's gross income. It doesn't matter if you got it legally or illegally. Bootleg liquor operations. That's why Al Capone ended up going to jail. He failed to report the illegal income from his liquor sales. That's what got him. Gross income is everything you make except housing. Now, one other big thing that might come up that doesn't count as gross income, gifts. Now, if it's a big enough gift, like to the tune of $17,000, you might have to pay some taxes on that, called a gift tax. But most gifts are not gross income. You don't report them anywhere. Well, clergy think they get a lot of gifts. Clergy think that they get a gift when they've done a funeral and they get paid an honorarium. And I'm here to tell you today, anything you give in exchange, a few years ago, the catchphrase was a quid pro quo. That's an exchange of something. If you get something if you give something for the money you get, it's no longer a gift, it's income. And the big one is, well, what if my church takes up a love offering and gives me? Sorry, that the IRS is going to say, no. That was part of, they only gave that to you because you were employed by them. You gave your employment in exchange, partially, for that money. That love offering is what everybody else calls a bonus. And it's gross income and it's taxable. So it's impossible for an employee to get a gift from his or her employer. The same with wedding honoraria, the same with funerals. Actually, today, I don't know about you all, but when I do funerals today, the funeral home tends to handle it for the family. They give me the check, and then, assuming you meet the thresholds, they also follow it up with a 1099 at the end of the year. So that's all. They're doing that because they're obligated to give anybody they pay more than $600 a 1099. And a lot of pastors, especially in small towns where you're doing a big share of the funerals, you probably will exceed that over the course of the year. So you're going to get a tax form. It's because it's all gross income now. Well, gross income, I do want to pause there. I know there is a question. I know there's a question about W-2s. I'm going to come back to it. We're going to talk more about W-2s later. I'm going to come back to that question about the W-2s on the stuff in boxes 1 through 6. I really think that's a call to the conference office to help get that straightened out. And health savings account, that also is not gross income. That's a pre-tax benefit, although there are limits to it. So I'm actually going to talk more about health savings account a little bit as well. So you start with gross income, and then you subtract out what are called above the line deductions. What are above the line deductions? Don't worry about the line. Above the line deductions are all the deductions that are available to everybody, regardless of whether they, we'll see in a minute, regardless of whether they itemize or take the standard deduction. So regardless of your income level, if you are allowed to take a deduction, it is above the line. And I've listed out some of them. And actually, the first one is a great segue to answer the question about health savings accounts. You actually can deduct health savings account contributions. However, be careful here, because if the health savings account contribution was withheld from your paycheck, it's already excluded from gross income, and you don't deduct that. This is if you write a check out of your checking account to the bank that holds the health savings account. And there are limits. You can only contribute so much every year to a health savings account. It's around, a little more than $3,000 for an individual and $6,000 for it's more than that now, but that's a roundabout figure. You get the idea. It's limited. And the deduction is available only if you wrote a check out of money that had already been taxed. I'm going to come back to move expenses in a minute. This is a great thing. Your self-employment taxes are deductible from your income taxes. You deduct them out of gross income, at least half of them you do. So it's like, if this is the government's way of giving you sort of the benefit that people paying FICA have, you get to deduct half of it. Contributions to IRAs, not PIP, that gets withheld before taxes, doesn't appear in box 1 of your W-2, goes in box 12. But if you made a contribution to an IRA out of your bank account, that's deductible above the line. And the big one for pastors, especially younger pastors or those recent seminary grads, student loan interest. We almost lost that one, but it's still there and you can deduct it. Now, unreimbursed moving expenses. It used to be before 2018 that if you were required to move by your employer, and Lord knows we as Methodist pastors are required to move by our employer a lot, and you had to move and you didn't get reimbursed, or you only got partially reimbursed for the move, you could deduct the expenses associated with moving, at least like things like paying for the movers and the truck rental, stuff like that. And on the flip side, if you did get reimbursed, it wasn't taxable. Well, in late 2017, the big tax reform bill, it eliminated this deduction, and it also made moving reimbursements taxable. So now if you get reimbursed, you have to pay taxes on it. Let's be clear. Getting reimbursed and having to pay taxes is still better than not getting reimbursed at all. Every year I have to have this conversation with a pastor who says, well, then I'm just going to forego my reimbursement so I don't pay taxes. And I have to explain that even if you pay 25% of it in taxes, you're still getting 75% that you wouldn't have gotten if you just don't take the reimbursement at all. So something is better than nothing. It's just that now we have to pay to get the something. Once you've pulled out all those deductions that are available to everybody, you are left with a new concept, adjusted gross income. So you started with gross and now you've adjusted it. And adjusted gross income is used by the government to determine a lot of benefits for people. So it's an important number. It's actually helpful if you kind of know around about what yours is. It'll help you know whether you're going to qualify for a particular government program or not. Once you've taken those out, you have step 2. Now you're going to take out more deductions. Now the deductions are called standard or itemized deductions. And you get one or the other. Now, standard deductions for 2020. This is for the returns you're going to be filing in April 15th of this coming year. Single individuals, it's $12,400. Married filing jointly, double that, $24,800. What's head of household? If you're a single parent, you may qualify for this. You want to talk to a tax professional. It's somewhere between married filing jointly and single. It can be real beneficial to somebody who is a single parent or has an adult dependent upon them that's qualifies as an adult dependent in their household. They may qualify for this even if they don't qualify to file married filing jointly. So you get the idea. So whatever your adjusted gross income, you reduce it by this number if you're taking the standard deduction. However, if you have certain itemized deductions that exceed those amounts, so it has to exceed those amounts in total, then you're going to take the itemized deductions. And I'm not going to go through all of them. Most clergy no longer can itemize deductions because the standard deductions got so large after 2018. That was when they changed the tax code to actually make it harder to itemize. And we think that's bad, and I get it. It sort of is, except that we miss the fact that they did that by really increasing the standard deduction. It's not perfect. I didn't love it, but it wasn't as bad as maybe what some critics might have made it out to be. Well, itemized deduction. The big one for people is mortgage interest. It's on a primary residence only. If you've got more than one primary residence, there are special rules for that. You need a tax professional. But you can deduct if you paid interest on a loan that was secured by your home, that interest is deductible if you're itemizing. And then the big one that pastors used to always qualify to itemize, charitable contributions. They are still deductible if you itemize. Now, they did, as part of COVID relief, they actually did make a small amount of charitable contributions deductible above the line. That's a special situation for just this year. Tax professionals, and if you're using software, it will help you with that. But generally, your charitable contributions are an itemized deduction. State taxes. If you paid state income tax or property taxes, it's not in every state, but in some states, it is in Missouri. You can also itemize, you can deduct those if you're itemizing deductions. The amounts are capped, but you can still deduct some of that. So there's some other ones, medical and dental. This is phasing out really fast. It's probably not going to apply for you anymore, but there's a floor and a floor. You have to exceed 10% of your adjusted gross income to take this deduction, but it's been available for a while. Now, this used to be a deduction. If you bought things on behalf of the church, it used to be that you could deduct those under Section 162 or 262 of the tax code. They eliminated this deduction. I'm going to talk a lot more about this when I talk about professional expenses. So just pause. Let me say right now, I get asked this a lot. Well, what about on a Schedule C? You should not be filing a Schedule C. That's for someone who is truly an independent contractor. So if you have a side business, a consulting business, maybe you will. But for your church employment, you shouldn't be filing a Schedule C because these are employee expenses, not business expenses. And that's different, two different concepts under the tax code. Today, because of the change in 2017-18, we now have to utilize what are called accountable reimbursement plans. And I'm going to talk about that when I talk about professional expenses. So I'll pause for questions here in just a minute. But before I do, let's talk about this. So which one do you take, itemized or standard? You take whichever one is more. Used to be that pastors almost always itemize. Why? Because we're generous and we tend to tithe. And because we tended to tithe, The standard deduction used to be small enough. It was about half of what it is today. So if you had a $60,000 salary or $65,000 salary plus housing, you tithed on it. That was $6,500 that you gave to the church. Just a few other deductions would, if you were single, would always push you over the threshold, and you would be itemizing deductions. The same with married folks. They typically, especially with two incomes, if they tithed on the two incomes, they would almost always get pushed over the threshold just by their charitable contributions. Well, that changed in 2018. Today, most pastors are taking the standard deduction. And here's why. Take a look at Pastor Jane, single taxpayer. She gave $10,000 to the church she serves last year. She's definitely going to itemize the deduction. Why? Because remember what the standard is. It's $12,400 for individual taxpayers. She didn't exceed $12,400. So she's taking the standard deduction. It used to be, that's a typo, that's my old slides. Used to be that she always took the itemized, because the itemized deduction was only, the standard deduction was only $6,300. Now it's $12,400. So let me check the chat real quick. Let's see. I have a couple of questions here. One, Roth IRAs. No. So the question is, does the deduction, the above the line deduction, count for Roth IRAs or just traditional ones? Only traditional ones. Roth IRAs are actually a post-tax contribution. You contribute post-tax, you pay taxes on the amount that you contribute, but then over time, the income that contribution produces, the investment income, is not taxed. And so when you pull it out, you don't have to, you no longer have to pay taxes on the amount you pull out of the IRA. So it's a great tool. It's a great tool for certain things in retirement. You want to talk to a retirement professional. It's not good for all retirement savings, because as pastors, especially, we're probably going to pay more taxes now than we will later. But for things like saving for a house that you have to pull a whole bunch of money out all at once when you retire, a Roth IRA or a Roth contribution to PIP can be really helpful. But you don't deduct. You're not allowed to deduct Roth IRAs. Next question is, were honoraria reported on the 1040? Honoraria, you would add them up and you would report them as miscellaneous income. There is a line for miscellaneous income. So I got a couple more questions here. Let me read them in the chat. Yeah, so the question about retired clergy. So you're going to need to talk to a tax professional, because I think that's riding a very fine line. You want to be careful. I would answer the question that, to be safe, you would not do a Schedule C as a retired clergy working part-time for a local church. All the funerals and weddings and stuff, that's really, the IRS is going to say, no, that's fee for services that you're giving as part of your employment. It's not an independent business. And so probably not. Now, if you had some kind of formal business where you were doing only weddings and funerals, maybe you'd need to talk to a tax professional about that one. It's a great question. It's just a really fine line. And then the next question, if you take the standard deduction, you would not need to record giving donations that you made through the year. That's correct. Now, it's helpful if the church still has an obligation to report those to you as a donor. I'm going to talk about that on Friday as part of my conversation about local church tax reporting for donations. They have to report it. But yeah, if you're taking the standard, you do not have to keep track anymore about those donations that you've given, because you're not going to get to deduct them anymore. And the answer about Fica, if you're retired, you may not be paying Fica anymore. So you'll, again, talk to a tax professional, especially if you're already qualified under Social Security. That really is for a tax professional to help you decide whether you still are obligated to pay Fica. You may not be, which is really good news for retirees. All right, let's move on. So the first two steps, you start with gross, you reduce it by the above the line deductions, you reduce it further, you you've got your adjusted gross, then you reduce it further by the standard and itemized deductions. Now you have the concept I started with, taxable income. So taxable income by definition is gross income minus the above the line deductions minus the standard or itemized deductions. Now you have taxable income. And that's the amount on which our income tax is calculated. So here's an important concept. We have a bracketed tax system in the United States. Again, I started by saying this. Most people think, well, you take your income and you just pay a percentage of it. Well, that's not true. As I've said, it's actually, we have to figure out our taxable income first. But even once we have taxable income, we are not paying a straight up percentage of our taxable income. We're paying a bracketed percentage. What do I mean by that? I mean, the first, let's say you're married and you're filing jointly, the first $19,750 of your income, your taxable income, you pay 10% of that. Then everything you make between $19,751 and $80,250, you pay 12% on that. And then you add it together. That's your tax. That's your income tax owed. Works the same way for individuals. So let me show you how that works in practice. So let's say this is probably not us. Say you have a taxable income, married taxpayers with a taxable income of $150,000. What's the tax owed? Well, you take the first 10% of that $17,750. It's easy to calculate. Then, this is a typo. Let's go back here. The first 10% of $19,750, that's $1,975. Then it's 12% of the amount of difference, 80,000 minus 19,751. You pay 12% of that, and then 22% of the last bit. And you add them together. So this is an old slide that got in by accident, but you see you add it all together rather than paying a straight up percentage. That's a really important concept for people to understand. And here's the thing. We pay less because of this bracketed system. But who does the bracketed system fall most heavily on? Well, people who pay straight up 10% of everything they make because they make less than this $19,750. Now, here's the good news. You never have to do this kind of math because your tax software will do it for you. That's really good news for you because it gets pretty complicated otherwise. I'm going to pause again because sometimes the brackets create questions. Again, the questions about Fica, talk to a tax professional. If you're already retired, you may not have to pay Fica at all. It just depends. So once you have the tax you owe, once you've applied the brackets, everything else is then reduced by any credits that you have. Well, what do I mean by credits? These are amounts that reduce your taxes directly. And the first credit is the biggest credit, and it's not really a credit at all. It's the amount you've already paid. What do I mean by that? Well, remember we talked about back when we were talking about the W-2, I said you might have an amount in box 2 of the W-2 because you submitted a W-4 and you had an amount voluntarily withheld. Well, here's the rule. The Internal Revenue Code requires American taxpayers to pay taxes as they go. For most people, that means that their employer withholds a certain amount. Not Social Security and Medicare, they do that too. They withhold 7.65%, but they also have to withhold a certain amount of income tax. That amount is calculated by the employee filling out a form called a W-4, and then a table. The employer uses a table to decide how much they withhold. And some people, if they have a working spouse, they might want to, the form has an adjustment built in. But the idea is that the employer is withholding an amount for income tax, withholding Social Security and Medicare taxes, and paying that on the employee's behalf over time, over the course of the year. Why? Because, well, the federal government has a cash flow problem, just like our local churches do. You know that. When does a local church have the most cash in the bank? In December and January. We're living large in December and January because people were generous over Christmas. But come August, after people have had their summer vacations, they weren't in church to make their contribution. Things get a little lean. That's when churches start having to tap some reserves maybe to pay the light bill. Well, the government's the same way. If the government said, hey, everybody, you don't have to pay your taxes until April 15th of the year following when they were owed, everybody would pay their full amount on April 14th or 15th. And the government would spend every dime of it by, May or June, and they'd be out of money. They need money, cash coming in to keep the wheels of government moving. And so they require you to pay all along. Most people pay, as I said, through employer withholdings. But if you're clergy and your church doesn't have another lay employee, that church is entirely exempt from all kinds of withholdings and reportings. They don't have to do it. And you still owe the money. You still have to pay. And you pay with a form called a quarterly, a 1040 ES. Now, even if you're in a big church and they have a big staff, you can do that. You can pay quarterly. There's nothing wrong with it. It's perfectly allowed. But you can choose, if you're in a church with lay staff, even just one, they have to do those payroll tax returns. They can do a voluntary withholding. I wouldn't get in a fight with them over it. If they don't want to do it, I would just pay quarterly and talk to your conference office about maybe getting some resourcing for them. But I tell pastors all the time, it is not worth creating a conflict over tax reporting. That's not helpful. So you can pay quarterly. 1040 ES, it's a quarter page of a form. It's easy. How do you know how much to pay in? That is a bit trickier. You need to talk to a tax professional, or the easiest way, if your income hasn't changed significantly, take your total tax bill that was owed last year and divide it in 4 and pay that in every quarter. It's as easy as that. And then on your 1040, you report how much you've paid in, either through quarterly payments or on your W-2. And again, if you're using TurboTax or H&R Block tax cut, it will do it for you through its algorithm. But you have to have an amount. You get credited with that. And the good news is it's entirely refundable. If you paid everything you owed in income tax, plus you get all the money back. I'm going to pause right there because that is a little tricky. Let's see. Oh, the question is, so I made 150,000 in the 22% bracket. Do I subtract 8251 from 100? That you got it exactly. That's exactly what you do. Yes. Then I have a question. Do I recommend doing both church withholding as well as paying quarterly? No, I don't recommend that. Here's what I recommend. You can do both. The key is get as close to paying all of the taxes you owe over the course of the year. And certainly get within $1,000 of the amount of income tax owed. Why? Because if you owe more than $1,000 when you do your tax returns, you broke the law. And you're not going to jail for it, but you're going to pay a penalty. And you don't want to have to pay a penalty. So figure out how much, and then you do one or the other. You can do both, but there's no real purpose to that. So I recommend one or the other. Get close to what you actually are going to owe. And again, last year's number is probably the safest. I got a question. When I got to the end of inputting info on TurboTax, there's a question about COVID relief on income made between March 27, 21, and the end of the year. If it was self-employment income. So that's going to depend. Probably not, actually, because you need to talk to a tax professional about that. So the COVID relief, let's see. There was a question about COVID relief on income made between March 27th, 20 and the end of the year. If it was self-employment income. I'd have to look into that. I don't know what that question refers to. It reduced my tax bill considerably, but I'm not sure. I don't know. You're going to have to ask about that. I don't know. You need to ask a tax professional. I haven't actually done my taxes to know what question that refers to. So I can't answer that one today. I apologize for that. Then I have a question. Can I do a W-4 for SPU income and still file quarterly for? Sure. Yeah. I mean, you can absolutely do that. It doesn't matter. You can do both quarterly and a W-4. You can also you can actually have them withhold enough from your church to cover all your income tax. So it doesn't matter. It all gets credited to the same place and you get credited with it. And the other thing that confuses some folks sometimes, that the amount that you've paid in, that you've had withheld from your paycheck, it's for federal income tax. But if you pay all that, it also credits your self-employment contributions. So that's a credit for everything, self-employment credit, contributions, and income tax. So the answer to the question is yes, but it's not necessary. So another tax credit, actually, I see a question that got put, so somebody, let's not use the Q&A module, but I will answer this one just out loud because I see it here. If your total tax last year was 0, do you need to pay quarterly if your income has not changed? The answer is probably not. Now, if your income did change, then yes, you might. But yeah, if you had 0 taxes owed, you've had enough withheld, you're fine. So another tax credit, this one applies. They changed this one in 2017 as well, 2018. There's a time horizon on it. It expires in 2025. Although I think they're talking about increasing it even more as part of the next round of stimulus relief that may or may not get passed, but it looks like it's kind of promising right now. So right now, the child tax credit is $2,000 per child. It does phase out at higher adjusted gross incomes. And the child has to be less than 17. If they turn 17, sorry, you don't get this anymore, which is no good. I have a child who's approaching that age, and I dread the day she hits 17 because this is a great tax credit. It's $2,000. $1,400 of it is truly refundable, even if you owed 0 taxes. So that's a good thing. It's that the government's giving you extra money. Another credit, this one almost went away in 2017-18, but actually this was a great, I thought a great moment of Christian unity. They talked about eliminating the adoption credit, and Christians, both progressive and conservative, all rose up together and said, wait a second. And so they kept it. It's actually almost a $14,000 tax credit. Everybody I've talked to says, hey, actually, it takes a really long time to get all your money back in the tax credit, but you actually can take it over the course of multiple years if you've adopted a child. It's a really great thing that the government does, and it's good. I mean, I think we all favor adoption. Lifetime learning credit, if you went out and you had to spend money on getting extra education to do your job, you can actually get a tax credit for that of up to $2,000. If your tax liability goes to 0, you don't get any of this, but it can reduce your tax liability a little bit. I will say this: if you had to pay the expenses, so if you got reimbursed from your church, you don't get this credit anymore. So it's a credit that if you had to pay out of pocket for some education expenses, it can be helpful sometimes. It's not as great. It actually used to be better. It kind of got they took the teeth out of it several years ago, actually before 2017 and 18, but it's still around. Earned income tax credit. If you've got kids, you're a single parent, you have income from work. My hunch is the minimum salaries of most annual conferences are going to take you right out of this credit. But if you got low income people and if you're serving in a kind of a low income area, this is the most underutilized tax credit in the tax code, and it's meant to help people who have low incomes, but who have lots of kids and are single parents. And so it's one to just be aware of. And so that's it. That's how the tax system works. You start with gross, you reduce it by above the line, you have adjusted gross, you take out the standard or the itemized. Now you've got taxable income, you apply the brackets. Once you apply the brackets, you have your income tax owed, and then you reduce the income tax owed by the credits. If you've paid all along, if you take advantage of credits, you may owe nothing or get a big refund. You don't want a big refund because it's like you're funding the government, but they will pay you some of your money back if you paid in too much. If you didn't pay in enough, you don't have enough credits, and you still owe taxes on April 15th, that's when you have to write a check to the IRS. So let me pause right there, see if there are any questions. I don't see any new ones yet. Just a minute. We're going to move on and talk very specifically about housing. And this is, we're actually going to take up a majority of our time that we have left today talking about housing and professional expenses. But I promise we will still get done around the 90 to, hour and 45-minute mark. Housing. Here's the rule. The rule is compensation, cash or in kind, paid to clergy in the form of housing is exempt. It's not gross income. It doesn't appear in box one of your W-2. Now, let's back up. Cash or in kind. Remember when I said that gross income is any income that you've received? And I said, I really mean that, even illegal income. It's everything. Well, it's also non-cash things that you receive. What do I mean by in-kind income? Well, back in the olden days, so my great-grandfather he wasn't Methodist, but he was a pastor, and he was actually sent to set up new churches in really poor and rural areas in rural Tennessee. And oftentimes, the people in that area didn't have enough to pay him. And so he would get things from the church like, chickens and goats. That's all income. It's just that it's in kind. Today, we don't get chickens and goats very often, although some pastors I've known have gotten big gifts from their church that really should have been reported. Things like watches that are kind of expensive. And once in a while, when they retire, even a car, that is in-kind income. And it needs to be reported to the IRS as gross income unless there's an exception to the rule. Well, in kind, if you're getting a house, that's a parsonage, that is income. And somebody asked the question, where do I report the fair rental value of my parsonage? Well, you report it on Schedule SE because it's exempt from income tax, but you do have to pay self-employment tax on all housing income. So your Schedule SE under income, it's going to have both your salary, any allowance, housing allowance or utilities allowance, plus the value of your parsonage. All that gets reported for your self-employment contributions. But none of it gets reported for your income tax. It doesn't appear in box one. Now, this has been subject to a lot of challenges in court. But I have great news to report. If you hadn't heard a couple of years ago, they were completely unsuccessful. They lost in the Seventh Circuit and then realized that the makeup of the Supreme Court did not favor them. And so they decided not to further appeal that decision. So right now, our housing treatment is as it always has been for a very long time now, all the way back to the 1950s. It's Section 107 of the tax code. So what's housing? Well, housing can be a lot of things. Housing income could be a parsonage and the furniture in it. Housing income could be housing allowance. It could be amounts paid on you as an allowance or an amount paid on your behalf for your utilities. All that would otherwise be income, but for this section. It's housing now, as well as amounts that you got designated as housing by the church that you then used to furnish your home. And furnish your home is really broad. It's not just furniture and appliances, but it's also other stuff like, you don't have to worry about this in Louisiana, snow removal. Missouri, we have to worry about snow removal. But you do have to worry about lawn care in Louisiana. And those expenses are part of furnishing a home. Anything paid to you as housing that you use to pay for those things is housing, and it can be excluded from income. I said excluded from income. Don't get confused. Some people talk about the housing exclusion, the housing exemption. It's all the same thing. The IRS says you don't have to pay taxes on income received as housing. So what's it mean? You have to remember that this is a benefit. Here's what happens to clergy. We think it's not a benefit. I've actually gotten to arguments with clergy, sometimes in these presentations, who say, I just wish we didn't have it. I just wish 107 would be repealed. We do not want 107 repealed. Here's what happens to clergy. They sit down to do their taxes on TurboTax, and they put in all the stuff from their W-2. And they then get a question. Is any of this received as part of religious employment? The answer to that is yes. All of it was. And then you get a question. Did you also receive the benefit of a home or an additional housing allowance that's not reported on your W-2? And the answer probably is yes. And then you have to put in the amount, the value of that home, and how much you spent of any allowance you got. And when you do that and you click submit, there's usually a green number when you start. And as soon as you click that green number becomes an enormously red number. And red means you're not getting a refund. You're writing a big check to the IRS. Why? What the algorithm treated all that as self-employment income. Both your cash salary and the housing value that you put in. And so you're paying your self-employment taxes. That's the big amount. If we didn't have 107, if it wasn't excluded from income tax, it would be even worse. The housing exclusion or exemption makes up for the fact that we have to pay 15.3% on our housing values. So I have a quick question here. I'm going to get to some of these. There are two questions on housing. Let's just pause on those. I'm going to answer both of them in the course of the presentation. So what's the rule? You can exempt from income tax, not self-employment contributions, any compensation you got and then you paid or used for housing, including the actual home and the furnishings in it, the rent, mortgage payments, utilities, furnishings. What sort of furnishings and other housing? I sort of mentioned a couple of these. I listed them for you. Oddly enough, the IRS has given guidance that says not cleaning services. You can't get housing allowance, spend it on cleaning services, and that count as housing, not pay taxes on it. I don't know why. IRS, not my rule. But, and this is going to answer one of the questions, the amount that may be exempted is limited to A, the amount set by the congregation in a charge conference. You're going to have some housing. It's going to be part of your charge conference paperwork. I know it is because I've been to Louisiana a couple of times, done these presentations, and I know you have a support form with housing resolution as part of your charge conference paperwork. So the congregation sets the amount of housing. That's one limit. So if you spend more than what they said, sorry, anything you spent that's more than that, it's not housing. It's going to be subject to income tax. Second, the fair rental value of your home, regardless whether you own it or whether it's a parsonage or whether you rent it, the fair rental value of the home with the utilities paid and the furnishings. How does that work? Don't get this confused with the rental value you have to enter for self-employment contributions. This is a limit on the amount you could exclude from income tax. Actually, I'm going to come back to it and show you how it all works together. Finally, the last limit, the amount you can actually substantiate with receipts. So let me give an example to show you how it works. Let's say you live in rural, well, I'll say Missouri, but I suspect it's the same for Louisiana. I live in rural Missouri. In the little town where I live, this is not an exaggeration. You can rent a 3-bedroom home for, I don't know, $500 a month. It's really low rental income or really low rental value. It's the middle of nowhere in Missouri. Nobody wants to live there, but people like me, and I love it. Okay. Well, let's say you start a church and that church just explodes and it becomes kind of a bit of a mega church. And they want to be really generous with you. And they say, okay, pastor, we're going to give you a housing allowance. And the housing allowance we're going to give you is $75,000 a year on top of your cash salary. Great. Let's apply. They set $75,000. That's the amount they set. If I spent $90,000 on housing, the $15,000 over 75 is still subject to tax because they set it at 75. But let's be honest, there's no way I can spend that much on a home where I live. And in fact, the fair rental value, even if I have a really nice home, unless I have done something really obscene, the rental value of my home is not going to get anywhere close to $75,000. I'm limited by that rental value. It doesn't matter what the church said. How do you know what the rental value is? I don't know. Here's my rule. Be reasonable. Zillow, check with a realtor, look at rents in the area. It doesn't have to be scientific. It just has to be reasonable. The IRS is not going to quibble with it unless you're doing something ridiculous like living in rural Missouri and taking a $75,000 housing allowance. And then finally, let's say they set $75,000, but I only spent $30,000 of it. I can only substantiate $30,000 with receipts. That means the rest, $45,000, is now taxable. What do I do? It's not in box 1 of my W-2. What do? I put it back in miscellaneous income on my 1040. So that answers the question that was asked. If you don't spend it, you have to pay taxes on it. Yes. If you don't spend it, not only if you don't spend it, if you don't have a receipt for it, and it needs to be an itemized receipt. And look, it's never going to come up unless you get audited. And I've done enough of these presentations over the years. I've talked to dozens of pastors who have said, yep, I got audited. I didn't have housing receipts. I ended up having penalties and interest on all my housing income because I couldn't substantiate it. You've got to keep the receipts in your tax files. So let me pause right there, see if there are questions. I do want to answer the question about Westpath retirement income. The answer is yes, you do still have access to retirement income from Westpath as housing. It's handled this way. Your annual conference, and I'm pretty sure Louisiana does this. I think we all do it. Your annual conference adopts a housing resolution for you as a retiree. You'll need to talk to your conference office and get that resolution and give it to your tax preparer. And then all of your income from Westpath can be subject to housing. So for that, the amount set is whatever your amount you got in retirement income from Westpath. That's the amount that the conference sets for you. It can be all of it. Now, and remember, your pension amount is probably not going to be, it's not as much as a full salary. It's small. It's a portion of your retirement income. So you can actually treat it all as housing, assuming it's less than the fair rental value of your home and assuming you have receipts to substantiate it. And that's all you have to do. So the question I'm getting is there a place on Form 1040 where the fair rental value of a parsonage can or should go? The answer is no, because you don't report it for income tax purposes. It's on Schedule SE, and it's just as part of your income. You just add in the value because that's all you're paying taxes on. It's just Social Security and Medicare taxes, your self-employment contributions. That's the only thing that will affect your housing. And that's where it's going to go. And I see you're fighting with the IRS about it. I would definitely get a tax professional to help with that when you're fighting with the IRS. So let's shift gears a little bit. That's housing. And we'll have just a few minutes at the time if there are more questions about housing at the end. Let's talk about professional expenses. Remember I said that the deduction was eliminated back several slides ago. There's a better way. So Section 162 of the tax code was used to allow employees to deduct unreimbursed expenses incurred in their employment. It's not a business expense. It's different. It's not on a Schedule C. These are employee expenses. Well, that deduction, it was never a very good deduction, to be quite honest. It was itemized, so you couldn't do it if you did the standard deduction, and it had a floor of 2% of your adjusted gross income. Well, it doesn't matter because Congress eliminated the deduction anyway. They just did away with it in 2017. But they left in place this rule that allows an employer to create an accountable reimbursement policy. And my hunch is this is also part of your charge conference paperwork. Here's it. What happens is the church adopts an accountable reimbursement policy as part of charge conference. And they agree to reimburse you for things you spent on the church's behalf. This was always better because it avoided all taxes of all sorts. There was no employee expense deduction for Fica, so you had to pay Fica on that money anyway. Well, this avoids everything. It's a purely tax-free reimbursement. But it has to be business related. You cannot take your family to dinner and get reimbursed. That's not business related. You can't go to lunch by yourself during the day and get reimbursed. That's not business related. Your own lunch is on you to spend like it is for everybody else. However, if you take a church officer to lunch to discuss a meeting, that entertainment value does have some business purpose to it. That is a business expense. The same with, this is really important because it hits Methodist pastors all the time, and it always hits them when they have to move. If you bought a computer and got reimbursed for it, getting reimbursed for it assumes that it has a sole purpose of business. Well, if you're using your computer for personal reasons, or you plan to take it with you, that's not business. You're getting something from the church. In fact, if the church gives you the computer for which you were reimbursed, if it's within the last year or so, that computer still has value. And if they just tell you to take it, that's in-kind income. They need to report that, the value of that computer that you're taking with you, on your W-2. You've got in-kind income. It's not a business purpose if you get to take it with you. This is the key. You are spending money on behalf of the church. So to whom does the computer belong? The church. And really, if you get reimbursed for a computer, that computer needs to be subject to all the policies around computers that you have in your church. I know maybe you have a small church. They don't have a lot of policies around that, but your conference does have some policies, usually around boundary issues. You can't be using a church computer for personal reasons if you got reimbursed for it. That's really important. And when you move, you either have to give the computer back or they have to report the income. If they let you, they can demand that you give it back. Or if they are nice and they let you take it, they have to report the value. Books, yep, they belong to the church, not to you. Most of the time, in my experience, churches do not want you to leave your books, but it would be good. And I speak from experience as an author. A book, once purchased new, ceases to be new, and its value, it's worse than a car. It plummets. I know this because I stumbled upon my book. It was published in 2018. I went to a used bookstore in 2019, and there it was on the shelf. And they were charging 50 cents for it. Your books that you buy have very little value. But it would be good if the church sort of gave you a letter and say, hey, we know you've got these books. It'd be great if they listed out the titles that they knew you had. We know we reimbursed you for these books. However, we deem them to have zero value, and we give them to you, and you can take them with you. Now you don't have to pay taxes because it was a zero value, but you get the idea. It's business related. Otherwise, it's taxable. Second rule, you have to make an adequate accounting. To get reimbursed, you have to give the church a receipt, an itemized receipt with a statement of purpose. Why? What were you doing with it? What were you doing? What's the purpose of it? What is the business purpose? Why? Well, because I just said, if it doesn't have a business purpose, then you need to be paying taxes on it, and the church needs to be reporting those to you on a W-2. If they're not doing that, they're actually violating federal law. And when a tax-exempt organization does it, it can result in the loss of tax-exempt status, which is why your church administrator, those of you who have experienced this, know what I'm talking about. Your business administrator loses his or her mind when you don't submit a receipt and expect reimbursement. They are super worried that the church is going to get into trouble with the IRS, and they could. You've got to make an adequate accounting. That's the whole idea behind this rule that allows for tax-free reimbursements. You can do it, but you have to make an accounting to the church. They have to be itemized. Mileage counts here, by the way, but you have to submit logs. The current mileage rate is 54.5 cents. Oh, sorry. That's also an old slide. Some of my old slides got mixed in. It's actually 56 cents a mile for 2021. It's down from 2020. When it was 57.5 cents. You see back in 2018, we've come up a little bit. That's the rate of reimbursement for business travel. So if you travel on behalf of the church and use your own vehicle, you get paid for the mileage. You get reimbursed for it tax-free. Why? Because you're putting wear and tear and spending your gas. But you don't get reimbursed for the gas and mileage. You get only the mileage. And it's enough. Believe me, it's actually more than gas costs. No commuting miles. You don't get reimbursed for commuting miles. Why? Because that's personal. It's not a business purpose. So what if you have a 2-point charge? Well, from home to church, even if it's only 10 feet, that's a commute. You don't get that. Even if it's 150 miles. I have pastors in Missouri on a part-time basis. They are sometimes driving from their home to their church 150 miles or more. Sorry, none of that is reimbursable as mileage because you're commuting. Now, there is a home office exception, but the home office, if your office is in your home, then the travel from home to the church ceases to be commuting. It's like going from in a 2-point charge from church 1 to church 2. That's now a business trip, and that's reimbursable. But your home office, it can't be just because you like a home office. It has to benefit the employer. When's it benefit the employer? Well, in rural churches, sometimes it's because there is no office. They don't have one. I had a church like this. They said, no, we want to pay the pastor for the trip to the church. And I said, you can't. It's commuting miles. And they said, well, but we don't have an office here. And I said, well, you don't have an office? No. In fact, we don't even have a bathroom. There's an outhouse. And we don't want to pay the light bill for when the pastor's here. I said, I take it back. That is a home. It's for the benefit of the church, for the benefit of the employer. Now there's a home office, and you can get reimbursed for miles from home to the church. Otherwise, not from home to church, only from church 1 to church 2, or once you're at the church, from church to hospital, etc. Just be reasonable about it. If the hospital, if it's going to take you longer to drive to, don't go. You can go home first, but then don't charge the church for the whole commute from church to home. Only charge for that to the hospital if you live between the hospital and the church. Hopefully that makes sense. Be reasonable. No commuting miles. Take that out of your reimbursements. I'm going to pause for questions. I have a question. If you have filled out a form 4361 and don't pay into Social Security, would I still recommend record the fair market value of a parsonage? And the answer to that is no. If you're not paying, it's only on Social Security and Medicare taxes. And I would say this: if you're new to if you filled out a form 4361 within 2 years of starting your ministry, you need to be very careful. You need to talk to Westpath, really, because you need to be saving more than everybody else is saving. Our pension plans assume that you're going to be getting Social Security. And to get Social Security, you have to pay in self-employment contributions. But the simple question that's being asked here is, if you did that, do you still pay Social Security and Medicare self-employment contributions on the market value of a parsonage? And the answer is you do not. So let me say a word. Let me pause and just make sure there is a question on mileage. Great. To be clear on mileage, on Sunday, driving from church 1 to 2, count the mileage. Yes, you can get reimbursed for that mileage, but not from home to church 1 and not back home once you're done. But between the two churches, yes, those are business miles. They're not commuting miles. It's a great question. Well, so the title of this presentation was Clergy Tax and Some Pitfalls. And so actually, I want to say a word about clergy compensation, because in addition to several pitfalls that I've named in taxes, I want to talk about a quick one with respect to clergy compensation. And it's because, and it relates to your professional expenses your accountable reimbursement plan that I just talked about. So when we talk about clergy compensation, what do we really mean? Well, certainly there is the cash salary. Cash salary is the part of your compensation that's taxable, okay? And it's paid to you as cash. Now, it's also going to count some other things. You may have some amounts withheld for after-tax contributions, things like a PIP Roth contribution or a PIP after-tax contribution, or if you've made voluntary income tax withholdings. All those come out kind of after your taxes, and the amount, that's all part of your compensation. It's all part of your cash. Now, your compensation also includes housing, and we just said that's not subject to income tax, but it is subject to self-employment contributions. But it's still part of your compensation. It's going to you for your benefit. And then there are some other amounts that are going to be withheld. They may not appear in box 1 because they were held out of your W-2 because they were held out before income taxes. Things like pre-tax PIP contributions or group health insurance premiums. Now, it has to be a group health plan. If it's not a group health plan, you cannot count it it's not pre-tax anymore. But that's the idea. And then there are some other benefits paid on the pastor's behalf, things like your CRSP DC and DB contributions or your CPP contributions. Those are all paid on your behalf. You never see the money because the church and the conference are paying on your behalf, but it's still part of your compensation. Now, here's where it gets tricky. On the pastoral support form or the compensation form of most annual conferences, they also include professional expense reimbursements and continuing ed reimbursements. Now, let me quickly, continuing ed and professional expense to the eyes of the IRS are identical. It's a business expense. It can be reimbursed through an accountable reimbursement policy. However, those amounts of reimbursements, that's not really clergy compensation. And the reason it's not compensation is because of what I said a minute ago. These are amounts that are reimbursed to you for things you've spent on behalf of the church. So it's not part of your compensation. It ends up on support forms and compensation forms to give the church an idea of how much it's going to have to pay to have a pastor. But that's not part of your compensation. It doesn't affect how much they contribute on your behalf for pensions. It shouldn't be thought of as compensation. And this is key. You should not move money out of cash into professional expenses or continuing ed without some really serious considerations. Why? Because you just gave yourself a pay cut. I understand there might be reasons to do that, but if it's going to be hard to get the money back out of the professional expenses and continuing ed and into cash, you don't want to do it for yourself or for future pastors in that charge, because it's not cash, and that's really taking a pay cut. On the flip side, and this is where, at least I can't do this in Louisiana, but maybe your conference treasurer or your DS can. On the flip side of this, the church should have something in professional expenses and continuing ed. If they're telling you they can't afford, they put a zero in that line, that's a problem, because I guarantee you they expect you to use your car and put on wear and tear and use your gas to go see them in the hospital. They're going to expect you to, get the right education requirements from the annual conference on your dime. All of that should be reimbursed by the church. And I understand that we can't be unreasonable. I wouldn't create big conflict over it, but you should have something in that line. In Missouri, a lot of churches don't meet our recommendation, but we actually recommend $7,000 of professional ed and professional expense and continuing ed money. Why? Because we know, like, a licensed local pastor is going to have to go to course of study, and they're going to have to drive to conference meetings. They're going to have to go to annual conference, for that matter. All of that should be reimbursed by the church. It's a business expense done on behalf of the church. But it's not clergy compensation. And be careful of that whenever you're thinking about it. Well, I'm going to pause again. I see a question. How is Westpath retirement used for housing reported on the 1040? It's not reported on the 1040. It's exempt from income tax. And so it doesn't appear. And in fact, once you're no longer obligated to pay self-employment contributions, you don't pay any taxes on it at all. It's why it's such a great benefit and why we really want to keep Section 107 of the tax code in place. Well, I've come to the end of my presentation and my slides. I just want to point out, this is a resource. It's self-serving, I fully admit. I did write a book. The book it came out right before tax reform. However, enough didn't change that the tax section of my book still applies for the most part. In fact, if you just put this presentation alongside my book, you got all the updates you could possibly need given tax reform. And it covers other things as well. The part one of the book covers individuals and clergy finances, and part two covers church finances and church issues. And so I'd recommend it. It's a great resource for you. And it's available from all the major booksellers, including our own Cokesbury. It's out from Abingdon Press, but you can also get it on, other booksellers, like, the big one that everybody uses online. So I'm going to just kind of stop there, kind of bring this to a close, see if there are any questions before I close us in prayer. Don't see any. I hope this has been helpful for you. I really appreciate all the questions. You asked great questions. We're very attentive. And let me do this. Let me offer you a prayer for you and your churches to close us out today. Let's pray. Gracious God, I give you thanks for the day. I give you thanks for each of the participants today, pastors, for any business administrators who are part of the conversation, especially any spouses. We give you thanks for our churches, for the laity who drive those ministries. We give you thanks for our annual conferences, for our bishops and our cabinets, even when they frustrate us. God, we give you thanks for being part of such great work. We certainly pray for those who are still dealing with the pandemic. We pray for a day when we can go back to in-person events and share together in fellowship. We pray that vaccine rollouts continue smoothly. People are protected from effects and other illnesses. God, I pray for those who are struggling with poverty, those who are calling out for justice. I pray that you be with them. I pray for each of these individuals, that you bless their ministries, that you pour out your Spirit upon them and ahead of them to shape the people that they meet, with whom they share the good news. God, I pray for the rest of the day, for good rest tonight. I pray for good days ahead. I pray all of this in Christ's holy name. Amen. Well, thank you all so much. And that concludes our webinar today.